Good afternoon and welcome to NYFP this afternoon. I'm joined by Alan of DME Securities. Hi Alan, thanks for joining me today.
Remy, thanks for helping me.
Well, on this Tuesday, we're seeing a bounce in the U.S. stock markets, but trading volume is fairly light. So what do you make of today's gains?
You bring up a good point. Yesterday, trading volume was very heavy on the sell side. We had about 1.6 billion sell side orders as opposed to 20 million upside. So much heavier on the sell side. Today, like you mentioned, light on the upside, which is not that it doesn't put that much of an exclamation mark on this rally. But, it is a bottom-feeding rally. There were a lot of stocks that were down $10, $15 yesterday. People are taking advantage of that. They're buying them. If you're a long-term investor, it's not a bad thing to do to get some cheap stock. It's like going to Macy's. It's a sale day yesterday. So it's a good thing to do, especially, like I said, if you're putting these blue chips away for 10 or 20 years, you're getting some good prices. Will they get cheaper? Possibly. Will they get better? Definitely. So it's a good time to buy.
Okay, Alan, well, now that we have that out of the way, in less than 2 hours, we'll be getting the Fed statement out from Bernanke. Do you expect Bernanke to hint at any quantitative easing measures or other monetary policy measures?
Not right away. He may indicate he'll either do some sort of QE3 or maybe short-term loans where he buys the short-term, turns it into long-term. He may do something like that. I don't think you'll see any action right now. I don't think he sees this as really actionary. He probably sees this as, like he says, transitory type of move in the market right here. He's more concerned about deflation than inflation, and the fact is we have a little more inflation right now than we do deflation. So I don't see him doing anything, especially since QE1 and QE2 really didn't work. It juiced the market for a while. It was like a sugar high, but it didn't help employment, didn't help housing, and it's just something that really didn't work. Doesn't mean he won't do it, but I don't think he'll do anything right away. You may hear something. If you do, the market is really going to rally. Otherwise, we'll probably stay where we are.
Okay, Alan, last but not least, I want to ask you about commodities. Now, gold futures are continuing to rally to record highs, and overnight we did see crude oil futures dip below $76 a barrel. But in the short term, what's your forecast for oil as well as gold?
Well, oil is really a commodity that the hedge funds are all involved in. So yesterday you saw a lot of hedge funds selling in oil. That's why the big move down. I think at the end of the day, like say by the end of the year, oil will be back to the high 90s, maybe low triple digits. I don't think that's a move that's going to stay. Gold, on the other hand, even though it's a commodity, is really more of a currency now. People are afraid of paper currencies, not only here in America, but around the world. We saw South Korea buy 20 tons the other day of gold. So you're seeing gold used as that safe haven. I think that continues because there's so much uncertainty, both here and abroad, especially in Europe. I think we get a lot of European calls to buy gold. And I think that's going to continue as long as there's this uncertainty in the G7 nations, especially. Gold is going to keep on going up.
Okay, Alan, thank you so much for your time today, and thanks for all your insight.
Thanks, Remy.